Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of PayPal, ticker symbol PYPL. And so they are reporting earnings this morning, having a conference call starting in about 15 minutes. And so I will be streaming that as we do look at the price action in the pre-market. Here we are looking at the chart on the daily time frame. And so, yesterday, PayPal did close just 1 penny below $67 at $66.99, being up about 1.5% on the day. And if you haven't noticed it, it is up almost 5% in the pre-market, trading right around a price of $72. So I will switch over to the minute time frame for us to keep an eye on the stock price action during the earnings call. And so it does look pretty good. And you might notice that there is this blue line up here at $72.50. That is marking the low of August 2nd of 2023. And really, the close of that day was at a price of $73.20. That does represent a gap that has yet to be filled on the daily time frame. And I think today might be the day, perhaps tomorrow. But if we do flip over to the minute time scale now, we can see that during the pre-market trading, that gap was filled at least to the low of that day at $72.50, with a high being $72.80 hit at what I guess would be, I think 8:01. Sorry, I'm in the Midwest time zone, so I'm an hour delayed from the East Coast, but I do believe the time here at the bottom that you can see, right where the cursor is, I do believe that is East Coast time, because that wouldn't make sense if it was Midwest time. But anyways, at 8:01, hit a high of $72.80. So I think this is going to be a pretty volatile, earnings call. And, actually, if we do look at the price action when the earnings were released, we did get some pullbacks. So if I do take a step back, actually, I'm going to switch over to the 10-minute time frame to look at this. So we actually dipped to the basically close to the lows that were hit on the 25th, which I think was last Thursday. Those lows were $62.95. So we did, during the pre-market, hit a low of, $63.51, just barely kissing the 382 level of a Fibonacci retracement here. And let's see if I put that on the daily time frame, we can see that Fibonacci. So we did pull back to right around here during the pre-market. So pretty volatile, especially when looking at it, on the daily time frame. But that's not to be, a big surprise or anything like that, because the last earnings call, the last earnings call, that's this earnings call. The last earnings call in February, we did see a pretty big gap to the downside, going down over 11%. I don't think this one's going to be to the downside. I think this one's going to be to the upside. And so I think we will be seeing some volatility, a gap to the upside, maybe get a pullback and retest $68 as support before continuing higher, potentially to $76.50. And if I were to have money on this, whether long or short, which I do not have a position in PayPal, if I were, I would have been going into this earnings call betting on it going long. But, I didn't have enough conviction in that to put money on it. And with that being said, though, and price being right around this gap, I do think that we will be retesting $76.50. But I, of course, could be wrong. But I do think this one's looking pretty good. And so, I'm going to switch over to the minute time frame, and I'm going to make sure that the PayPal earnings call is set up, because I believe, it should be. The volume is on, so I'm actually going to put the headphones in. I'm sure music is playing right now, which I will get a copyright strike for if I play that. So I'm just going to listen to it, and then once the audio for the call starts, I'll plug you guys into that, and I will tune myself out, turning my mic off. And if you're curious to see what what I'm looking at over here, if I do put the display over here, this is my Chrome browser. We've got some slides. Maybe I will show some of these during the call. Maybe I'll minimize myself so I don't block what's behind me, and I can actually do that right now. It's just the PayPal logo, so nothing too exciting. But yeah, can flip through some of these, and yep, it's really just, a bunch of financial stuff. I think it'll be much more engaging to listen to them talk about this stuff rather than just read this. And actually, before getting into these technical documents and stuff, I think it might be nice to the music. I don't really like it. It's got like the bass is not balanced. But let's see. I gotta switch over to, oh, I don't need to switch over to the right display. I need to turn the display off. So we've got that here. So it looks like we're getting a little bit of a pullback here, but I did want to highlight these little messages that are here. PayPal lifts 2024 profit forecast as spending stays resilient. Margins improve. PayPal's earnings are out. They're the first under a new calculation. And let's see. So those are the two there. And then PayPal lifts fiscal year outlook following first quarter earnings revenue growth. And so PayPal climbs after Q1 earnings beat with strong total payment volume. So looking pretty good. I also think this is a nice kind of indicator of the economy. I do feel like we will see a rollover if we have not already started to see that with the S&P 500, the NASDAQ, semiconductors. And if you are curious about semiconductors, I will be streaming the AMD earnings call this afternoon. I'm very curious about that for my own personal trading and really just learning more about that industry. I don't really know too much about it. So I'm pretty excited about that. But yeah, I do think that there will eventually be a rollover. It doesn't seem like, at least as far as what's going on with PayPal, that is not here yet, that rollover. So maybe their next earnings report, maybe we'll see some volatility to the downside. But I think this one, got this gap fill during pre-market trading, so we'll see what happens when the market opens. But I am intrigued by this chart. I guess I should say I'm not necessarily intrigued. I'm not looking to establish a position or anything, but I am not surprised. I expected it to be going up. So, or that's what seemed most likely considering the big drop last time. If we do maybe flip over to the daily time frame, yeah, so this big drop, and these lines that I have drawn before, well below the stock price. So it seems like it is broken out. It's free. It's free to roam, and yeah, there's some gap levels to the upside. Gap right here at $72.50. This previous high that was hit on July 31st of 2023, $76.50. Just that being, let's see, is that the exact, the high was $76.54, so I just have that purple line there as an approximate level. Psychological, we think, with zeros at the end of our numbers. And yeah, and then beyond that, also another thing about this level, if I do throw up the volume profile, I suspect there will be a bit of a volume lip right around here, right around this gap. We are bumping into that right now with the pre-market trading. And I do see, this consolidation over here. That was really a bear flag. If we think about that down move, consolidation that lasted a long time, could not get above 76.50. And we saw this big drop, gap down. That was, I believe, associated with this earnings call from a year ago. So that's pretty interesting. Pullback, starting to trade or continuing to trade within this falling wedge. But, we have broken out of that following the last earnings call. There was a drop, or actually before the earnings call, but then we pulled back in, but then we broke out and confirmed and retested that orange downtrend. So here, is a test, but then we ended up breaking down because of earnings. Here we got a breakout, test of that level, return, retrace to the scene of the crime before moving higher. And, now we have pulled back to the 50% level here at $61.99. Bouncing off of that, that would have been a great dip buying opportunity on April 19th, just a couple weeks ago, because since then we have seen nothing but up moves from that, let's see, open. I'll do it from the open up to, the top here. It's 10%, so not insane, but going up to this gap fill, that's almost 17% increase. So pretty good for a big, large cap company like PayPal. Does have a market cap of $70.52 billion, but that number is going to be going up once the market opens because, price is up about 5% during pre-market trading. I'm just going to switch back over to the 1 minute time frame so we can see that here. We got this consolidation going on. That actually looks like it might be, a bear flag forming. So maybe we do see a retrace to 68.21. Maybe that's a good dip buying opportunity if it is to continue higher, as we have, retested the 382 at 63.46, go up to the gap, then a retrace to the 236 at 65.27 would make sense that there could be a pullback to, actually that's not a Fibonacci level, that is that's the top. That is the 0% retracement, if you will. So that is, I guess that does correspond with the high here. I just don't have it labeled as a Fibonacci retracement because that was, a double top to the penny. So that's pretty interesting. And so I could see price going back to that, just kind of stair-stepping up, bounce off this level, go up, bounce off this level, go up, bounce off this level, and then maybe break out to 76.50. That could be pretty cool. But, maybe it could also roll over. Who knows? Maybe it's a sell the news event after, this earnings beat, because I wonder how guidance is going to be. I wonder what the forecast is going to look like because, I feel like the economy is going to be getting a little tighter in maybe not the second quarter, but the second half of the year. Still got music going on in my ear about 2 minutes before the earnings call does start. So I'm just here chatting away. I've seen people tune in and tune out. So, this earnings call will be starting soon. And so, I'll be getting that going here in a minute. But this is the earnings price action on the minute time scale. Oh, sorry. I just coughed. I had the mic on. That was rude of me. I should have turned the mic off. Let's see. Got about a minute left. Still just music. Should be starting maybe in the next 20 seconds. So we'll see. We will see. All right. Nothing going on yet. Still just music. Looks like the chart's waiting for it to start as well.
At this time, I would like to welcome everyone
Let me
to
know if the
PayPal
audio is good.
Holdings
I'm going to turn
earnings
my mic
conference
off so
call
we can
for the
just
first
listen
quarter
into this.
2024.
I hope you all
All
enjoy.
lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, please press star 1 again. I would now like to introduce your host for today's call, Ryan Wallace, Head of Investor Relations. Please go ahead.
Good morning. Thank you for joining PayPal's first quarter 2024 earnings conference call. Joining me today is Alex Chriss, our President and CEO, and Jamie Miller, our CFO. We're providing a slide presentation to accompany our commentary. This conference call is also being webcast. Both the presentation and call are available on our Investor Relations website. In discussing our company's performance, we will refer to some non-GAAP measures. You can find the reconciliation of these non-GAAP measures to the most directly comparable GAAP measures in the presentation accompanying this conference call. Our remarks today will include forward-looking statements that are based on our current expectations, forecasts, and assumptions, and involve risks and uncertainties. Our actual results may differ materially from these statements. You can find more information about risks, uncertainties, and other factors that could affect our results in our most recent annual report on Form 10-K and quarterly report on Form 10-Q filed with the SEC and available on our website. All information in this presentation is as of today's date. We expressly disclaim any obligation to update this information. And with that, let me turn the call over to Alex.
Thank you, Ryan, and thank you to everyone for joining us this morning. This quarter, we delivered a solid set of results, and the year is off to a good start. Our new leadership team is operating well together, and we are really starting to get our arms around the business. You will see in our numbers and the read-through that our efforts are beginning to make a difference. We also see substantial need for continued retooling of the company, how we work with our customers, and how we execute. We are encouraged by the progress to date, but remain realistic that we still have a lot of work to do and a lot of opportunity to drive profitable growth ahead of us. What we said at the start of the year still holds. This is a transition year where we are focused on execution and making critical choices that will set the business up for long-term success. We have a plan that will return this company to where it needs to be and remain focused on execution to get there. We see clear opportunities for operational improvements across our large enterprise, small business, and consumer businesses, including Venmo, and in driving more efficiency across the organization. But it will take time to prudently drive a meaningful and sustainable transformation. In the first quarter, we delivered 10% revenue growth on a currency-neutral basis on $404 billion in total payment volume. Transaction margin dollar performance grew 4%, which was better than expected thanks in part to actions we took. Our non-GAAP earnings per share increased 27% year over year. Our results are stronger than we expected earlier in the year, and they require some unpacking to put them in the context of the full year. What I want you to understand is what we are focused on, namely making surgical changes to the way we are running the company. Some of these will have an immediate impact, and others will take longer to bear fruit. As such, we need to maintain flexibility throughout this year to make important decisions to drive the long-term growth of the business. This includes decisions about where we prioritize and reinvest, how we go to market, and actions that can be taken to sharpen our value proposition for consumers and merchants. With that in mind, we do now expect full-year EPS to grow mid to high single digits, which is partially driven by our better-than-expected start to the year. Jamie will take you through our Q1 results, contours of the year, and updated guidance in just a few moments. Let me first spend some time providing an update on our execution against our customer strategies and investment priorities, and detail progress on our efforts to operate more efficiently. Turning to our three customer groups, we continue to make steady progress on strengthening our strategic positioning and product portfolio. For large enterprises, we continue to focus on accelerating growth in branded checkout and driving the profitability of our business. We are executing to get upgrades to our core branded checkout experiences to the market. We continue to make good progress in our early testing of Fastlane by PayPal with a focused group of merchants. And data from those alpha merchants show that returning Fastlane users are converting at nearly 80%. We are just getting started and already creating a low double-digit lift in guest checkout conversion for participating merchants. The results so far are encouraging, as incremental conversion improves our merchants' growth and profits. Demand for this product is promising, and we expect to make Fastlane generally available in the U.S. in the second half of the year. Additionally, we are continuing to focus on making it even easier to pay with PayPal by removing friction from the checkout process. In the coming months, we will continue to move to more passwordless authentication processes like biometrics and launch a redesigned mobile checkout experience, which we believe will result in higher conversion rates. We've begun active discussions with our largest enterprise customers to focus on commercial outcomes that reflect the true value of our payments processing platform and the services we provide. As we speak, many of our top merchants are gathered in California for our annual Commerce 360 customer conference, where our teams will go deep on the innovations we plan to bring to market this year and the value they can provide. We are also in the early stages of evaluating the overall dynamics and pipeline of our top 10,000 merchant accounts. As we evaluate our programs, we see clear opportunities to price to value, not only with our PSP processing, but especially with our value-added services that we already provide. Services such as payouts, fraud prevention, and processing orchestration. This process will take time, but we have a focused game plan, and we are already having fruitful conversations that are helping merchants understand the additional value they can unlock by strengthening their relationship with us, including through our value-added services. For example, DraftKings recently went live with our fraud management solution, Fraud Protection Advanced, which combines our intelligence with advanced machine learning and analytics to help businesses protect themselves from ever-evolving fraud threats. This is an example of a best-in-class offering and a key differentiator against our competitors. It also showcases our ability to leverage AI to drive customer benefit and is an area where we can price to the value we provide. For small and medium-sized businesses, the launch of our PayPal Complete Payments platform has been gaining momentum over the past couple of quarters. We've made good progress in expanding PPCP's geographic reach to now more than 34 countries. In the first quarter, we expanded the platform to Canada, the UK, and more than 20 European markets. We also added new features to PPCP in Australia, Germany, and the US in recent months. Additionally, we are seeing positive response to our new low and no-code tools for merchants and developers to integrate PPCP, which we launched in March. As of the end of the first quarter, approximately 7% of our SMB volume is already on PayPal Complete Payments, with our team focused on distribution through partners that can accelerate adoption to the largest number of customers. Our efforts here are important because PPCP ensures merchants have our latest branded checkout integration, which will include Fastlane, so that consumers have a best-in-class checkout experience wherever they shop, and merchants will benefit from higher conversion. On average, merchants who adopt PPCP use approximately 4 PayPal products, which deepens the relationship and reduces churn. This translates to an average revenue per account for a PPCP full-stack merchant that is nearly 2 times that of an SMB on a legacy integration. As you all know, I have a deep passion for helping small businesses succeed. Frankly, this is an area where PayPal took its eye off the ball. Over the years, we've deprecated products and made pricing decisions that negatively affected our market positioning. Despite that, we still have the largest population of SMBs anywhere who are using our products and eager for us to do more for them. This is an area where we are investing to correct our course. We are here to serve and win the small business market. On the consumer front, the PayPal app is at the center of our strategy to leverage the power of our data to create more value for our customers and unlock new sources of revenue and margin expansion opportunities. In the first quarter, we revamped the PayPal app with a new look and feel and introduced enhancements to our rewards program to enable shoppers to get the most out of their money while increasing conversion for merchants. Additionally, we began testing a comprehensive rewards-focused lifecycle marketing program. When tested with approximately 20% of our PayPal app users, we saw it drive a nearly 7% increase in weekly app logins and 4% increase in transaction margin per user. Introducing consumers to new products like our debit card that can help maximize the value they receive from PayPal is a major focus. The enhancements our team made to our onboarding flow enabled a 38% increase in debit card first-time users during the first quarter. On average, a customer who adopts the PayPal debit card is more engaged, generating a 2x lift to transaction activity and a nearly 20% increase to average revenue per account compared to users who primarily use checkout. Approximately 4% of our active PayPal consumer accounts in the US have a debit card. So while we have a lot more to do, this work is meaningful to the economics of our business. In the quarter, we onboarded BigCommerce and WooCommerce to our package tracking solution. In the 12 months since launch, we've had approximately 7 million active accounts use package tracking. This is a key pillar in our post-purchase strategy. Package tracking not only allows consumers to track their shipments within the PayPal app, but will also enable us to make personalized purchase recommendations and present relevant offers through the app and our AI-powered smart receipts. We believe these innovations will drive engagement with the PayPal app and incentivize future branded checkout activity. For Venmo, we are focused on giving our customers more ways to immediately use their Venmo debit card in person with Apple Pay and Google Pay, which you will see in the market in the coming months. In the first quarter, we saw a 21% year-over-year increase in consumers using our Venmo debit card. Remember, Venmo debit card holders are among the most engaged accounts and on average drive 6 times the incremental revenue than that of a P2P only customer. Simultaneously, we are making it easier for consumers to use their Venmo balance when making payments or sending money to friends. In the first quarter, balance-funded P2P senders grew by 17%, which contributed to our overall transaction margin dollar growth in the quarter. Our leadership team is continuing to go through our business from top to bottom, understanding where we can operate more efficiently and invest in the innovation that will offer the greatest impact for our customers and PayPal. This is a mindset shift we are driving throughout the entire organization. Investing for durable growth backed by a clear payback path and time horizon remains a top priority. Investing in branded checkout and better serving our small business customers are 2 focus areas you heard me talk about today. We are also actively evaluating and greenlighting new investments to accelerate future growth that support and strengthen our strategic priorities. A good example of this is our remittance business, Xoom, which has stagnated while similar services have gained share. This business has been on a negative revenue trajectory due to a lack of prioritization and clarity about its value proposition. That is now changing. We are executing the right product refinements bundled with an enhanced and more customizable pricing model intended to promote growth over the long run. We plan to reduce the cost of cross-border transfers and provide consumers the option to eliminate transaction fees altogether when funding with our PYUSD stablecoin. We are activating those plans, and we expect to see tangible progress throughout 2024 and beyond. The key takeaway here is that we are in the process of assessing a handful of areas of investment where we believe there are compelling unit economics and market upside. These may mean that we will make decisions to invest in 2024 where we believe these investments will ultimately contribute to the sustainable and profitable growth of the company. At the same time, we must maintain our focus. We are continuing to evaluate the markets we operate in and the products we offer. Where we see areas to improve focus and prioritization, we will take action and update you accordingly. Finally, a few words on our continued efforts to drive operational efficiency and productivity across PayPal. We are instilling a rigorous cost-benefit discipline throughout the company and leaving no stone unturned when it comes to reducing unproductive costs. We are also investing in automation that will help answer our customers' frequently asked questions, simplify the integration process for our merchants, and enable our team to deploy solutions more quickly. As mentioned on the last earnings call, we have started reporting stock-based compensation as part of our non-GAAP metrics beginning this quarter. In addition to our annual incentive plan shifting to cash payment from stock, we have also better aligned our incentive programs to performance, particularly focusing on transaction margin and non-GAAP operating income growth. We will continue to focus on a pay-for-performance culture that appropriately aligns pay with results. I'll conclude by thanking the PayPal team for continuing to innovate and serve our customers. While we are still in the early innings of driving a meaningful and comprehensive transformation of PayPal to deliver the sustainable and high-quality growth we are aiming for, our first quarter results are an encouraging indication of what our team's renewed strategic focus and persistent execution can achieve. We will continue to update you on our execution throughout the year and be transparent about our progress. I'm confident that we are taking the right steps to build long-term profitable growth. With that, I'll hand it over to Jamie to take you through our first quarter results.
Thanks, Alex. Good morning, everyone. We had a solid start to the year with first quarter results that were above our expectations. As Alex mentioned, it's still early in the company's transformation. We are getting deeper and understanding both our challenges and our opportunities with much greater clarity. Our goal for 2024 is to foundationally set up the business for the future by making key decisions and aligning our investment path for growth. And to do so, we are laser-focused on strategic analysis and decision-making, driving innovation back into the business and executing with excellence. While it will take time for our efforts to sustainably flow through results, the speed at which the team is moving is encouraging, and we are making steady progress. Let me start with a summary of our financial performance. As a reminder, our non-GAAP results now include the impact of stock-based compensation expense and related payroll taxes. This change is intended to enhance transparency, operating discipline, and align our performance measures to how many investors already evaluate our business. Now moving to our results. As Alex mentioned, in the first quarter, revenue increased 9% at spot and 10% on a currency-neutral basis. Transaction margin dollars grew 4% year over year, improving in growth by more than 400 basis points from the fourth quarter. I'll walk through the drivers of that growth in a few minutes and provide context on the shape of the year, including tailwinds that we expect to be more pronounced in the first half compared to the second half. Under our updated non-GAAP methodology, earnings per share were $1.08, representing 27% year-over-year growth. Under the company's prior non-GAAP methodology, which excluded the impact of stock-based compensation, earnings per share would have increased approximately 20% to $1.40, above our guidance for mid-single-digit growth on a comparable basis. Relative to our outlook, higher earnings per share were driven by a combination of factors, including better-than-expected transaction margin dollars, ongoing expense discipline, the timing of certain investment and marketing spend, and interest income. Now I'll walk through some key operating metrics that support those results. We ended the first quarter with 427 million total active accounts and 220 million monthly active accounts. Total active accounts increased by nearly 2 million from the fourth quarter and included growth in PayPal merchant and consumer accounts, in addition to other products. We were encouraged to see total active accounts inflect positively in the quarter, and we remain focused on driving deeper relationships and more activity across our customer base. Monthly active accounts continued to show steady progress, up 2% year over year to 220 million, with contribution from both PayPal and Venmo. Transactions per active account, which is a trailing 12-month number, was 60 in the first quarter, up 13%. Excluding PSP processing, which is primarily Braintree, transactions per active account grew 7%. Moving to volume growth, in the first quarter, TPV grew 14% on a spot and currency-neutral basis to $403.9 billion. U.S. TPV grew 12%. International TPV grew 17% on a currency-neutral basis, primarily driven by strength in continental Europe and improvement in Asia. Global branded checkout growth accelerated to 7% on a currency-neutral basis from 5% in the fourth quarter. The first quarter included about a 1-point benefit from Leap Day, as well as ongoing benefits from the growth of global marketplaces. Within branded checkout, large enterprise and international markets were the biggest contributors to growth. We remain laser-focused on driving deeper adoption of our best-in-class solutions with small and medium-sized businesses and improving our mobile experience, which are critical, particularly in markets like the U.S. and the UK. PSP processing volume grew 26% in the quarter, driven by continued momentum from Braintree compared to 29% in the fourth quarter. Conversations with merchants have been encouraging as we shift our focus to a more disciplined go-to-market and renewal process that emphasizes a focus on profitable growth. Merchants recognize the product and performance improvements we have already started to make and are excited about the pipeline of upcoming innovation. As I noted earlier, revenue in the first quarter increased 9% at spot and 10% on a currency-neutral basis to $7.7 billion. Transaction revenue grew 11% on a spot basis to $7 billion, driven by Braintree and branded checkout. Other value-added services revenue in the quarter declined 2% on a spot basis to $665 million. Within other value-added services, interest on customer balances continued to be a meaningful tailwind. Our credit business performed relatively in line with our expectations, with revenue lower because of two main factors. First, we are carrying lower merchant receivables after tightening originations last year. Second, we have had lower revenue share on our off-balance sheet U.S. consumer revolving credit portfolio due to ongoing normalization of loss rates. Transaction take rate declined 5 basis points to 1.74%, driven primarily by lower foreign exchange fees and lower gains from foreign currency hedges. In addition, mix shift to large merchants continued to impact our branded checkout take rate. Transaction margin dollars increased 4% in the first quarter. Higher interest on customer balances, branded checkout, better transaction loss performance, and lower credit losses were the largest contributors to growth. While the performance of the core business has been relatively consistent, we expect that a few of these tailwinds are likely to be less meaningful as we move through the year. Specifically, we expect to see lower year-over-year benefit from interest on customer balances and lower year-over-year improvement on transaction and loan loss performance. Non-transaction related operating expenses declined 2% as we continue to actively manage our cost structure while reinvesting into key strategic initiatives. Part of the decline in operating expenses is a result of certain corporate and marketing investments deferred to the second half, as well as lower stock-based compensation. Non-GAAP operating income grew 15% in the quarter to $1.4 billion, and non-GAAP operating margin expanded 84 basis points to 18.2%. PayPal generated $1.8 billion in free cash flow in the first quarter, or $1.9 billion excluding the impact of held-for-sale accounting related to our European buy now, pay later externalization. In the quarter, we completed $1.5 billion in share repurchases, bringing share repurchases over the past 12 months to approximately $5.1 billion. We ended the quarter with cash equivalents, and investments of $17.7 billion and debt of $11 billion. I'll now move to our second quarter and 2024 guidance. Consistent with the approach we shared in February, we will continue to provide revenue guidance one quarter at a time. For the second quarter, we expect revenue to increase approximately 6.5% at spot and 7% on a currency-neutral basis. In addition, we expect non-GAAP earnings per share to increase by a low double-digit percentage. For the full year, we continue to plan for a relatively consistent macroeconomic and consumer spending environment. With respect to earnings per share, we now expect 2024 non-GAAP EPS to grow by a mid to high single-digit percentage. As Alex said earlier, we are in a transition year, and we do not expect that our quarterly progression will be linear. To help bridge this outlook compared to our prior guidance for approximately flat non-GAAP EPS, there are two main factors I would point you to. First, our inclusion of stock-based compensation expense within non-GAAP results is expected to benefit EPS growth by approximately 3 percentage points this year. Second, we saw meaningful outperformance in the first quarter relative to our plans. We intend to reinvest a portion of this performance back into the business. We expect earnings growth to be more muted in the second half of the year, due primarily to less benefit from interest income on customer balances, normalization in transaction and loan loss performance as we progress through the year, and the expected timing of investment actions. Underpinning our outlook, we now expect transaction margin dollars to be slightly positive for the full year. We expect non-transaction operating expenses to increase slightly. Embedded within this outlook is the flexibility to make key strategic decisions to invest and reinvigorate profitable growth within components of the portfolio and accelerate go-to-market efforts. For the full year, we expect other value-added services revenue to be roughly flat year over year. This excludes any potential impact from the CFPB late fee regulation, given pending litigation across the banking industry and uncertainty on both timing and implementation. As a company, we have already taken steps to mitigate the future impact, though these take time to fully take hold. Consistent with the approach we shared last quarter, our guidance includes minimal impact from the new innovations rolling out this year. Our focus is on execution as we begin moving from test and pilot phases into launch. We continue to expect free cash flow for 2024 to be approximately $5 billion and for at least $5 billion in share buybacks. In closing, 2024 is off to a solid start as we drive significant change across the company. We have clear opportunities to lean in further. We are doing the hard work now to position PayPal for profitable growth in the years ahead, and it has been incredibly energizing to see the team's commitment to this goal. With that, I'll now hand it back to the operator to begin Q&A.
Thank you. At this time, I would like to remind everyone, in order to ask a question, please press star 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Tien-Tsin Huang with JP Morgan. Your line is open.
Hey, thanks so much for all the detail here up front. I want to ask on transaction margin dollars, if you don't mind, the acceleration there. Maybe can you give us a little bit more detail on the growth across the main businesses, branded checkout, unbranded, and what we've been calling other? And of course, on the other side, I'd love to hear if there's any change in thinking there on the strategy to reclaim growth or even divest some of those assets. Thanks.
Yeah, thank you, Tien-Tsin. Let me hand it over to Jamie to walk you through transaction margin, and then I'll take the more strategic piece on other and how we think about the year.
Good morning, Tien-Tsin. I'll just walk you through the drivers for transaction margin growth during the quarter. We were happy with the positive growth progression. I mentioned in my prepared remarks, we've got a lot underway to really position the company for positive TM growth over time. In the quarter, just to walk it a little bit, interest income on customer balances was the highest contributor. Branded checkout continued to grow profitably and was a nice contributor to our growth this quarter. We did benefit from Leap Day, but we also benefited from strength in large enterprise and international. We've been very focused this year on PSP profitability, and that will ramp over time, but it wasn't a meaningful contributor this quarter. And we've just had small, but I'd say steady, ongoing product improvements in Venmo and P2P. So we saw some shifting there and better transaction and credit loss performance. And then lastly, to the last point of your question, we did see smaller drag from the other smaller parts of the portfolio. I don't know, Alex, if you want to talk through that a little bit.
Yeah, let me just sort of take a step back, Tien-Tsin, and talk about how we've been thinking about the year. You know, you've heard us talk about this as a transition year. You know, the way we've really been focusing the team is on sort of three different components to make sure that we're set up well for profitable growth into the future. The first is accelerating innovation and ensuring that we've got best-in-class innovation, whether that's on the consumer side and ensuring that our customers have a frictionless, incredible experience in checkout, to an unbranded side where we allow our merchants to have, again, best processing available. So really accelerating the velocity of our innovation. The second is adoption and ensuring that once that innovation is actually in the market, that our consumers are using it, that our merchants are onboarding to our latest and greatest integrations. You know, I'll give you an example. You know, we talked about in the last call the opportunity for debit card engagement. We changed the onboarding flow inside of the PayPal app this past quarter and saw a 69% higher debit card engagement just by changing that flow. So a big focus on the team on not just delivering our innovation, but actually delivering the adoption. And then lastly, as you mentioned, cleaning up some of our underperforming services. I mentioned Zoom on the call. That is a business that we looked at very hard. It's been underperforming for a couple of years now. And we wanted to make a decision on, is this an asset that's strategic to the business that should be a profitable grower for us or not? And when we looked at it, we realized that there were just opportunities where we had priced ourselves out of the market in a number of different corridors that we could make strategic decisions on and actually make this a profitable growing business. And so that's just an example. We're going top to bottom throughout the organization, and there will be some businesses or markets that don't meet that cut, and we'll let you know when we make those decisions. And there will be other ones that, with focus and execution, will turn around.
Got it. Appreciate it. Thank you.
Your next question comes from the line of Darrin Peller with Wolfe Research. Your line is open.
Hey, guys, thanks. You know, I think it would be helpful if you don't mind just first revisiting some of the initiatives around unbranded and your conviction and the timing around the impact from them on perhaps on transaction margin. But maybe even more specifically, if you've had discussions with Braintree merchants around pricing, and I think you touched on some of the prepared remarks, but more pricing to value than pricing to win. How are those conversations going? And I guess, Alex, market-wide, when we think about the appreciation of the value-added services and differentiator for PayPal's two-sided network, how has that been resonating in the market lately?
Yeah, thank you, Darrin. So again, just to sort of paint the high picture on unbranded, you know, this is an important segment for us, both for enterprise and for small business. We have to nail the basics, right? So our customers are looking for the best auth rates, the best uptime, the best availability, the best reliability, and those are things that we are now providing. And I think over the last few years, as we've been building the service, whether it's Braintree or now with PPCP, we've been investing in that and establishing a beachhead for our product across the market. In doing so, though, we also have been building value-added services that, to be totally transparent, we haven't been able to price to value, or we haven't been able to ensure that we're engaged with our customers in a real end-to-end strategic conversation. That's changing now. And so to your question, you know, we're having great conversations with both enterprise and small business merchants around our end-to-end solutions, the value-added services that we can now bring to bear, really more strategic conversations, as you mentioned, around the two-sided network, both an unbranded, a branded, and then even things like our new marketing and ad platform
in the mix. We're now having really deep conversations with our merchants that, again, are strategic for them and extract the value of the services that we're providing. So very encouraged with these conversations. Obviously, it's going to take time, especially for some of the largest merchants. It just takes time for them to roll out and adopt. But our teams right now are, as I mentioned on the call, in LA with our Customer 360 conference and showing them all the innovations and having really, really good conversations. So encouraged with the start. It's just going to take time throughout the year.
Got it.
Your next question comes from the line of Timothy Chiodo with UBS. Your line is open.
Great. Thank you for taking the question. I wanted to touch on two parts, really, one around mechanics, one around the uplift. On the mechanics, there might be two ways to go about this. One is to make it a part of your unbranded offering, and it could be either part of your negotiations on pricing, it could be a separate fee, but any way you look at it in that scenario, it would be more of a if Fastlane, then Braintree does the processing. But the alternative way would for it to be more of a as a service and available on a processor agnostic basis. One, to see first if you can give us color on which routes you might be able to take, or maybe both. And then lastly, on the uplift, which is if we think about the range of net take rates with unbranded at the low end and branded at the high end, where do you think Fastlane could eventually reside on that spectrum? Thanks.
Yeah, thanks, Tim. Let me take the first part and see if Jamie wants to add anything in. We are really excited about Fastlane as it now gets to market. We are live with a handful of early partners, and the results just continue to impress. And just as a reminder, we're now enabling 80% conversion rate for returning users through a guest checkout flow. What's even more exciting that we've now been able to start to see with these early merchants is that we're actually seeing unrecognized users. So these are non-PayPal users opting in to Fastlane at a 40% rate. That just shows the power of our brand, and it shows the power of what PayPal can be. And it goes a little bit to your question around how we think about pricing it and how we think about go-to-market, because it's even beyond just an unbranded processing element. I don't want to unveil exactly how our go-to-market will work, but that data point shows that this is not just within a PayPal ecosystem. This is allowing us to actually take the brand that we've established over 25 years and leverage that for our merchants to deliver incredible checkout conversion rate for the 60% of the market that continues to go through a guest checkout experience. So we're really encouraged by the early signs there. In terms of rollout and how we think about it, obviously on the PPCP side, as we continue to deliver Fastlane to that platform through many of our platform partners, becomes easy for our small businesses to one click turn that on. So that will be a big part of our rollout, and then having good merchant conversations as well on the large enterprise side. And again, those are kicking off really in earnest this week at our C360 conference. So again, the last thing I'd say just on pricing, and then Jamie, see if you want to add anything, is because we've focused this year on a transition year, we may get very aggressive on the pricing side when it comes to Fastlane for 2024 because we want to drive adoption. We think this is a best in the market innovation that all merchants should have access to. And as they think about winning this shopping season, our encouragement is improve the onboarding for them, create low-code, no-code opportunities for them to get up and running as fast as possible so that they can win this season and really prove to themselves that conversion improvement. And, rest assured we'll be pricing to value over time to ensure that we get the right value from that. Jamie, anything you'd add?
No, I think you've said it all. I really think Fastlane reinforces our holistic value prop, both for branded and for unbranded. And the focus on merchant checkout conversion and that being at our core, I think drives a strong value prop, and it will support strong pricing over time.
The only thing that I would just last point is this conversion rate with Fastlane. What's so exciting to me is not just the 40% that's coming in as unrecognized users leveraging our brand, and the 80% conversion rate of guest checkout for returning users, but this is just early days. This is with a handful of merchants. This is a network effect. As we gain more and more users coming through, as these users now become returning users over and over again, those rates should continue to improve. And so this is already an order of magnitude better than anything else in the market. And with the network effect and scale that we have, we just expect it to continue to get better.
Excellent. Thank you.
Your next question comes from the line of Ramsey El-Assal with Barclays. Your line is open.
Hi, thanks so much for taking my question this morning. Alex, could you comment on the European Commission ruling to open up the iPhone NFC hardware on the handset, and whether you see that as a competitive opening for PayPal in Europe? I know there's some rumblings in the U.S. as well about that type of a move. I mean, how ready from a product perspective are you to take advantage of a more open NFC environment? Thanks.
Yeah. Thank you for the question, Ramsey. So let me set the context so that it's clear how we think about it. First, we must play in an omni-channel world. We have established ourselves as the leader in the market in online, and our customers love us and use us globally for online checkout. But they are demanding an offline opportunity, an omni-channel opportunity, and to get the value that we're able to provide as we start to deliver not only the basics of our security and flexibility, but also as our rewards platform continues to improve. We want to be able to deliver a PayPal service for customers everywhere, anytime, every purchase. So we will be playing in an omni-channel environment. That where there are locations where NFC opens up, that obviously becomes a very easy opportunity for us to provide a wallet in an Android or iPhone operating system, and we will be ready. If there are environments where it's not available, we will still operate in an omni-channel. So omni-channel is a strategic initiative for us. It's something that is customer back and delivers an incredible PayPal experience, again, for every purchase and every checkout. And we'll take advantage of whatever market, whatever features and functionality we have in whatever market we play in.
Got it. Thanks.
Your next question comes from the line of Jason Kupferberg with Bank of America. Your line is open.
Good morning, guys. I just had a two-part question. The first, just following up on the transaction profit dollar growth. I know you're now expecting slightly positive for the year. I guess that would seem to imply maybe a little bit of deceleration from the Q1 levels, even though the second half comps are a little easier. So just wanted to get a sense of whether, that's conservatism or just some normalization of things like transaction and loan loss that helped you in Q1. And then the second part is just, is there any change in your full year expectations for branded payment volume growth? Thank you.
Good morning, Jason. So just to walk through a little bit of the first half, second half dynamics on transaction margin dollars, as I talked about before and you noted, Q1 in particular benefited from a few tailwinds, and we do expect those will be less meaningful as we move throughout the year. First of all, the growth in our interest income on customer balances, it was the largest contributor. But when you start to look at later in the year, the comps just get more challenging. Rates were rising in the latter half of last year. We also saw improvement in transaction loss and credit loss in the first quarter. Transaction loss in particular may not sustain or may not be as material as we move throughout the year. And we saw, as you pointed out, a meaningful benefit in loan losses in the first quarter, and we don't expect that to continue either. So, I'd say those few things are some of the dynamic. And then our initiatives and some of the new innovation that Alex talked about, it will take time to ramp. So right now, we're focused on execution. We want to keep expectations measured until we see really steady execution results.
Yeah, and just to underline Jamie's point, we have put limited upside to this innovation that we've talked about. in these expectations. And so, again, this is about us having the flexibility, us ensuring that we take the right time and do the right thing by the customers, as well as building the long term. But those are not built into to the rest of the year.
Yeah, and you asked about branded as well, and when we look at that, we had a nice quarter in terms of TPV and revenue. It was a healthy contributor to our transaction margin dollars. You know, we did have some benefit this quarter from leap day, but by and large, we expect branded revenue trends to be pretty consistent with last year as we look at that. And I guess the other comment I might make is that when you think about take rate for us, we saw a decent drop last year. We do expect take rate will come down again this year, but not nearly to the same extent. And a little bit of that, as it comes through on the branded trend line, is just that we're seeing a little bit of mixing towards large enterprise from SMB, and that's impacting the take rate side.
Thank you.
Your next question comes from the line of Mike Ng with Goldman Sachs. Your line is open.
Hey, good morning. Thanks for the question. Just two for me. First, I was just wondering if you could just talk a little bit more about the drags on the smaller part of the portfolio and transaction margin dollars. You know, when does that kind of work itself out of the system? And then related to transaction margin dollar growth, you know, you talked about balance funded Venmo transactions contributing to growth in the quarter. Could you expand a little bit on that? You know, do you see that scaling over the next couple of years? And you know, what are the opportunities to improve card attach for Venmo users? Thank you.
Great. Good morning, Mike. On the smaller parts of the portfolio, I guess what I'd say at a macro level, we had seen a pretty significant drag on that last year. It is coming through this year at a smaller rate. I mean, part of these are products we've deprecated. Some of these are, you know, frankly, acquisitions that we just haven't invested in. And as Alex mentioned, you know, we're going through a process of really looking hard at these. You know, candidly, some are just in decline, but the declines are smaller. And some we're investing in or making decisions to really put in more in maintenance mode, which is really shifting the profile going forward. But it will be smaller this year, and it'll take a few years for that to burn off.
Yeah. Let me talk about, you know, up level and talk about Venmo for a minute, and the opportunity there. So again, you know, on the positive side, we have, you know, the leading P2P platform with incredible customer base, with disposable income 22% higher than the U.S. average, 60 million monthly active users and 90 million 12-month actives. So this is an incredible platform for us to work at. As we've talked about in previous calls, and I'll reiterate here, I'm dissatisfied in how we've really thought about monetizing the platform, and really thought about delivering, in many ways, just customer experiences that they're looking for, right? Customers of Venmo are looking for dollars and looking for an alternative to traditional mechanisms when dollars are flowing in, and they want to be able to use Venmo for all of their expenses. Just to give you, put some numbers behind it, there's $18 billion of net new funds that flow into the platform of Venmo every single month. 80% of those dollars leave within 10 days. That is just unacceptable. And so our ability to provide the products and services that our customers need when those dollars come in, whether that's improving debit card penetration, which you've heard is a focus, and you've heard we already in some of our onboarding flows are starting to make significant improvements on, or providing other opportunities for money in or money out opportunities and access to capital for our Venmo users. This is just a clear opportunity and a clear focus area for us. So again, early days, the team is focused on it. You know, hopefully you hear sort of a reinvigoration in my voice of what Venmo can be and the opportunity ahead of us, but very, very excited about where we're taking it.
Your next question comes from the line of Bryan Keane with Deutsche Bank. Your line is open.
Hi, good morning. Solid first quarter results here. My question is just still more on the big picture. You know, the naysayers on PayPal would say the company is structurally challenged with the rise of payment methods like Apple Pay. Alex, I know you've been at PayPal now for a little over 6 months. What do you think the naysayers are missing on the competitive advantages PayPal still has in the market, in particular to grow branded?
Thank you, Brian. Thanks for the question. So, a couple of thoughts here that I think people are maybe not appreciating enough. The first is 60% of the market is still what I would consider to be non-consumption. 60% of the market still does not use any mark. So that's what we're playing for. We have the best brand, we have the best products and services, and the best ability to be able to deliver. And with products like Fastlane, not only delivering a reboarding opportunity for our customers, but that stat that I put in earlier, around 40% of unrecognized customers coming through and taking a Fastlane experience now gives us an opportunity to be able to remarket to them and turn them into PayPal customers. So step one, 60% of the market is non-consumption, and I think we've got a leading opportunity there. On the other 40%, we're still the leading player. And to be, again, transparent, and I've said this before, we have not delivered the innovation and the experience that I would expect and that our customers expect. We are doing that now. An improvement in the app, an improvement in the branded experience, reducing latency by 50%, investing in passwordless opportunities and passkeys will improve the conversion rate and improve the experience, and then creating value-added opportunities and an increased value proposition for our consumers with rewards. I think we're the only player out there at the scale that we have to provide that end-to-end experience. And again, we provide everything for our customers. It's rewards, it's buy now, pay later, it's a debit experience. And back to what I mentioned earlier on the call, with an omni-channel play now, PayPal can be the solution that you can use anytime, anywhere. So our ability to now start to play in an offline world and take the same brand and the same experience to every purchase, I think is something that, again, gets me excited. But we've got to prove it, and we've got to continue to execute and create great experiences in the market for our customers.
That's great. And just had one follow-up. We are getting a few questions on the pending CFPB regulation on late fees. Any impact on PayPal from CFPB caps on late fees?
Yeah, Mike. So first, while PayPal's not directly impacted by that regulation, we are indirectly impacted through our revenue share with our consumer credit partner. There's a lot of uncertainty right now around both timing and implementation of that. And as I mentioned before, our guide excludes the impact of that, just given the uncertainty. The industry expects that if implemented, the impacts would be largely offset over time. And we have been very focused on mitigation. We have actions underway. But really, in any scenario, it takes time for those offsets to fully set in. But I guess what I'd say in terms of impact is, the date that's being debated right now is a May 14th implementation date. And if that were to be implemented, it would be approximately a 3 percentage point impact to EPS growth for the year. But that is before mitigation. So by 2025, we would expect roughly half of that impact to be offset and then more over time.
Thank you.
Your next question comes from the line of James Faucette with Morgan Stanley. Your line is open.
Thank you very much. I wanted to go back to Fastlane, and Alex made the comments around making Fastlane available to all merchants and derive it so that they can derive the benefits of it. How should we think about that in terms of what needs to be done, timeline for progression, et cetera? It sounds like you're going to start moving beyond at least those initial merchants that are using it now, but just trying to think about how that ultimately could end up with most of the merchants served by Braintree and then ultimately the merchants served by PayPal more broadly.
Yeah, thanks, James. Here's the best way to think about it. First and foremost, we have to have the best innovation in the market. It was important for us to get some early customers up and running and using it, and the data continues to hold and certainly delight these merchants. And look, in in this world, they all talk to each other. And so, the ability for our merchants to now be, rabid fans of the checkout conversion improvement that they're seeing through Fastlane is great proof points for us as we now start to scale it and again, think about price to value. The second leg will be, okay, now that we've proven this out and we've started to really, just to be clear, we're talking about, driving conversion rate for some of the largest merchants in the world. We need to make sure that this was proven and that it works before we roll this out at scale. There's a lot on the line to be able to nail this, which is why we're moving at a measured pace and ensuring that in Q1 and Q2, we've really proven it out. The conversations we're having at our C360 conference right now, the conversations we're having with some of our PPCP platforms that are now rolling it out to small businesses is, okay, what is the way that as we get to the second half of the year, we can really enable the merchants to have this up and running so that they can win the shopping season and the holiday season in the back half of the year. So that's how we're thinking about it. Merchant demand is very encouraging. As you would imagine, when you have a product that improves conversion rate and provides a double-digit lift in guest checkout conversion, that's a game changer. And so demand is high. We want to make sure that we have as low friction an onboarding experience as possible, which is why we wanted to make sure that the ability for folks to upgrade to the new integrations would make sense and be easy for them. And we wanted to make sure that customers could onboard. So the plan is back half of the year, get as many merchants on so that they can win the holiday season. This will still take time. Not everyone will get on for this holiday season. And we expect that will continue into 2025. But at some point, there will be a tipping point. If I think about over the next year or 2 years, where we are going to expect all of our merchants to be on the latest and greatest integration, which includes Fastlane. And we will then move to deprecate our old integrations. And that's going to be an important milestone for us as we take what is really 15 years of legacy integrations and consolidate them on a more modern stack and a more modern integration for our customers. That allows us to continue to build innovation, continue to drive the best experiences for merchants, for customers, and obviously the best transaction margin results for the company as well.
That's great. I appreciate the color there, Alex. And then you mentioned you were getting a little bit of improvement in Venmo transaction margin. How much of that is coming from increased acceptance of Venmo as a payment option versus finding ways to reduce costs in transacting Venmo and P2P transactions, et cetera? Just trying to understand kind of what the drivers there are and what potential could be.
Yeah, it is a combination. What I'd say is, we're seeing Pay with Venmo really starting to take off. Obviously, it's in the U.S. it's an incredibly well-loved brand, and when people see that button, it's an opportunity for them to use those dollars that I mentioned earlier that are in their account. So that's an exciting piece online. The piece that, again, I'm sort of dissatisfied with, but excited about the future is the offline piece, right? When I talk about omnichannel, it's for PayPal and for Venmo. And so those, billions of dollars that are coming in every month into the Venmo ecosystem, we have to continue to give our customers opportunities, whether it's debit card penetration or other innovation that we come up with, for them to be able to, tap and pay and check out. And so all of that will move towards improving transaction margin. That said, we're also getting better with our risk models and leveraging AI. We are, there's a lot of AI conversations in the market. I would say we are one of the leaders when it comes to leveraging the data that we have at scale to improve our transaction losses, improve the customer service ability for our customers, and improve our transaction margin over time. So still, again, early days, there's a lot of work to continue there. But again, my excitement for the path and the direction for Venmo is pretty high.
Thank you.
That is all the time we have for questions. I will turn the call back to Alex Chriss for closing remarks.
Fantastic. Thank you, Sarah. And thanks, everyone, for joining us today. As you can tell from our results and the comments today, we're making steady progress on our transformation efforts. We had a good first quarter, and we are deep in execution mode. And with time, we will return this company to profitable growth that I know we can deliver. So thank you all.
This concludes today's conference call. You may now disconnect.
Hopefully that was enjoyable, helpful, useful, all of that. And it does look like, the market just opened about a minute ago. I wish they would have ended the call maybe a minute earlier, but it's cool to see that pop up. I'm actually going to pull my headphones out. And so I don't have those in my ears. And yeah, it does look pretty cool to, I was curious to see, switching over to the daily time frame right before open, I saw that big green candle, but then I refreshed it and, that's a gap up. And it does look like, 70.25, does seem like a level to be contending with. I'm actually going to delete some of my comments here so we can see those lines a little better. And let's see, a little cat emoji screaming, eyes, and triple top. But yeah, it does look like 70.25 is potential resistance. But, this is just the first couple minutes the market is open. So I wait 15 minutes and see what happens. And so I do feel like that's going to be, something to be keeping in mind that, it's going to be volatile at the beginning of the market opening. And but maybe these levels that I've highlighted will be of importance. So that's 69.55 does look like it was the low so far of the day. 69.51 being that low, but maybe we're testing that. Maybe going to pull back a little bit. Maybe could come down to 68.21. And I actually think that would be a good thing, because that was the high over here, double top here. And so that is effectively like the scene of the crime. So returning to the scene of the crime, or a retrace to the scene of the crime, could be really good. Pulling back to 68.21, bouncing there, that could be a great dip buying opportunity. Or, maybe potentially getting a pullback to yesterday's high, which was 67.55, or the close, which was 66.99. Filling that gap could, free up any, potential magnet, that the downside would be pulling, and then maybe getting a bounce. We have not yet seen a gap fill on the daily, which is getting to a price of 72.50, but really, but really, the gap fill, the more proper gap fill, which would be a price of 73.20. That was the close on August 22nd, which I did mention at the beginning of the stream, I believe. And so I could definitely see price getting up to there. We have not gotten there, but it could also be kind of a tease. We've had multiple attempts to, break higher that have failed, but now that we are above this double top, I could see a pullback to 68.21, and then maybe a move up to $72, $73, and potentially getting up to this high here at right around 76.50. But then that could potentially be a double top. Then we see a pullback. So good to be considering that, because there is going to be some volatility, as we do have a gap up and we do have a gap to the upside that still needs to be filled on the daily time frame. However, it was filled during pre-market trading, or at least filled relative to the low of this day, but a proper gap fill to the close has not yet happened. And, if we're talking about proper gap fills, that would have to be on the daily time frame, as far as, my understanding of gap fills goes. So, well, I think that a healthy thing for the stock would be to fill this gap to the downside, properly filling it to, a price of $66.99 would be the best. And that could be a great dip buying opportunity. Potentially, maybe, I've drawn this downtrending line here, maybe a retest of the 236 here at a price of 65.27. Not saying I think it's going to go there, but that could be a nice level to, if you got some, if I was to play this, and I had tons of money on the side, I might place buy orders, dollar cost average in at different levels. One might be yesterday's high or yesterday's close. Another, it might be the 236, potentially expecting a bounce from that level, and then to see some moves up to 72.50. But, I'm not playing this. I don't plan on playing this. But thinking about, WS, I will get to your comment, and AGBA, I was watching that after that stream. So I'll comment on that, and I'll switch over to that, but then I will close the stream. But I do think AGBA was pretty crazy. But yeah, so anyways, with PayPal, I could see pullback dip buying opportunities before continuation higher, and maybe a pullback to the 236 right around $65. Maybe that would be associated with the FOMC meeting tomorrow and Jerome Powell speaking following that. I do think that there will be some volatility to the downside regarding that meeting, so good to be cautious about that. And so I will switch over to MRIN and AGBA. Those were requested. And then after that, I will close on PayPal. But I'm not going to take any requests other than those two because I got some other stuff I need to do, some other videos. But let's see. AGBA should be on here. And that came up in a stream a couple weeks ago, and it had a couple big moves to the upside. And I was saying, it had these two candles. This was Friday, I believe, on the 19th. And I was, for myself, at least for my risk management, I try to not chase things. And so I saw these big moves up, and I said, I'd wait for a pullback with this gap here. And then on Monday, the very following day, went up 100% exactly. That's pretty remarkable. And so, I missed out on that. I did not partake in it, but, I don't like to chase things. And so, following that big green candle, I hid my head in the sand. I was being not trying to chase. And then it did pull back. And now from that pullback, let's see what kind of a move to the upside from this pullback. Let's see, from the open, let's see if $2 up, now 60% from that open price, really from the lows of this pullback. And, what might be interesting is doing a Fibonacci retracement. Is there something, maybe I could do it from 35.2. There we go. Up to the high here, which was $3.13. I'm just going to adjust this here. $3.13. There we go. And it does look like that was a pullback to the 382 and a bounce up. So pretty cool. I'm curious to see what's the close going to be today. If it can close above 313, that could suggest continuation, really, being a confirmation that this is breaking out, continuing higher, getting a close above 313. So that's pretty interesting. But yeah, like I said, I'm not chasing. If you're in this position, I would look for a close today above 313 and might still go higher, maybe get another 100% move. So pretty remarkable. If we do take a step back here on the weekly time frame, what are some levels that this might be bumping into? Some resistance, maybe around 465. That was the, let's see, open for the week that closed on January 20th of 2023. And so that opening price was $4.59. So right around 460. Maybe prices going to there. That's, still a pretty good up move from current price. Let's see, actually, I'm going to take a step back to mark that level. And I'm just going to do it from the week before and mark it at 460 because we like to think with zeros at the end of our numbers. And so that level, let's see, let's get a measurement up to there from, really like this high. That represents a 45+% swing. So still potentially a lot of upside for this. But for me at this point, and, with my kind of view of the market right now, a little too risky for me, but maybe it's of interest for you. And so I will also look at Poet since you've got all these requests right now, WS, but I will throw up MRIN. And I will add that to, I'll add that to the DGen Ed list. And I will also do, I think I have some stuff on the request list, which is, I think, what I used for, and I'm actually just going to switch over to the request list, and I will delete Rivian since I made a video on that, and Blink. I will add I will add PayPal so I can close on that, and I will add Poet. Is that Poet Technologies? I imagine so, not Poet Biorefining. So let's see. First, looking at MRIN on the daily time frame, pretty big gap up. So like I said, I'd be concerned about this gap being filled with earnings coming up on the 2nd. So is that Friday? Let's see. No, that's Thursday. I could see actually a pullback to filling this gap. If that gap is not filled before earnings, I could see that taking place following earnings. So this seems a little risky to me right now with earnings coming up. Also, maybe this is not significant, but if I do draw a trend line so that we have no closes, so I guess yesterday's close. So let's see, I'll do this to the penny, being the close from April 10th, $3.89.8, and then yesterday's close of 261. So can I remember those numbers? 89.8, $3.89.8. And yesterday's close, was that 62 or was it 61? 61, dang it. I got to adjust this again. So let's see this trend line here. Maybe that could offer some guidance. Does look like a breakout occurred from this downtrend. No closes above that level. Two closes at that level. That's really what this line is based on. So I could see if this is a breakout, I could see a retrace to the scene of the crime, and that would be coming down to this trend line. If that gap is not filled prior to earnings, like I said, I could see that happening. And so if that is the case, earnings, that would be a retrace to a price of like $2.30. So there could be some volatility to the downside to that. If that gap is then filled, if this retrace to the scene of the crime is, achieved before earnings, then I could see, that being a bullish sign following earnings that this could be taking off, maybe getting to this prior close of like right around $4. So that's a 30% swing basically from current price. So maybe there's a good move here, but if it does pull back to this downtrend, that could then be, let's say that happens before earnings, that could be, 60% swing just getting to like $4. So this is intriguing. There was a 1-for-6 reverse split that occurred on April 15th. So yeah, this one's pretty intriguing. I unfortunately work on Thursday, so I won't be able to cover the earnings call. But I also don't know too much about the company. It is a fairly small market cap, only 9.2 million. So I would think that there'd be a lot of volatility associated with this one. And if I do throw up the volume profile, it does look like it is bumping into a considerable amount of resistance, or consolidation here. And I could see a lot of resistance coming into play with like the consolidation over here, right? Really just getting around $4 a share. And that also corresponding with the approximate highs over here. So I'm actually just going to make that level be $4 to the dollar, to the cent. And I'm going to make that line a little bit thicker, make that yellow so it stands out a little bit better. But yeah, that's kind of where I would see price stopping out at, but maybe there's a breakout above that and a retrace to that level as a new scene of the crime before moving higher. Then I would think the next level, maybe 550, or potentially I'd think this is right around $5. With the highs here, let's see what was the high on this day, 492. So those are all levels. Sorry, I'm just throwing them all out there at you, but I would think that those are important ones to be paying attention to. So yeah, thank you for that. And I'm going to make sure that this is on the DGen Ed list as well as with Poet, which I will go over now. And so here, let's see. Wow, pretty big moves. This seems pretty overextended to me. Let's see, but let's look at the volume profile. Yeah, I mean, I could see it pulling back to, where we had this consolidation here, maybe that acting as support. And so really you'd want to think, in my understanding, I would want to see it like $2.95 or really like $3 acting as support with this one, because you do have this consolidation below that. That would then be kind of like the buffer. But if price does break to the bottom of that consolidation, that really being at a price of like $2.70, that might be, kind of a stop loss level, or maybe this gap fill here, which has of course already been filled. But the open and I believe high from November 2nd of 2023 was at a price of $2.59. So maybe I would move this line to that level, $2.59. Maybe that would be, I don't know if that would be a stop loss level, because, there was potentially support there. There is more consolidation below that level. So if I do adjust the frame here, it does look like there is some support. Actually, no, I mean, this could be like a range from like 260 to 270. Maybe that would be a stop loss window, and maybe picking up shares or reaccumulating around 230 if there is a bounce. Maybe there'd be a wick down to 230. So like, let's say if I don't have a position in this, which I don't plan to establish one in it, my approach, if I did want to, might be that maybe we'd see a wick down to 230 or 232, where we do see this volume shelf here. And if we see a wick down to that, but then a close above 259, that would suggest to me that that was a dip buying opportunity. It could be going higher. But if it doesn't do that, if it wicks down but then closes below 259 or closes at or below 230, that would be an indication to me that this is probably going lower, maybe to revisit these highs here around a price of $1.50, or maybe this little volume shelf here that we see at a price of like 166. So maybe that's where a floor would be if it did break below these levels that I've gone over. So I just keep that in mind. Yeah, no problem, WS. So yeah, hopefully that's helpful. I am going to switch over to PayPal to close the stream on the ticker of the hour. And then I'm going to, try to make some videos on Polestar today. Then I'm doing the AMD earnings call this afternoon, really for my own selfish interest, because I am short semiconductors. But, I just want to be learning more about that market, learning more about that sector. And somebody posted a comment that, if I'm a short seller of semiconductors, I have a bias. Everybody has a bias. Whether it's long, short, doesn't matter, on the side, being timid, not willing to enter. We all have biases, and that's the reality. But you've got to remove those biases and just look at the charts. And so that's what I try to do, and then I try to trade off of those. I don't have enough money on the side to trade all of these. I wish I did. But the reality is we all have a bias. We all have emotions. But the charts can remove us from that. And that's my approach that I try to take to the market. And like I said, I felt that we might be returning to 68.21. It does look like PayPal is doing that now, testing that double top as support. But what I could see as being a more compelling dip buying opportunity, or showing strength with PayPal would be a wick down to fill this gap, but then a close above 68.21. I think that would show a lot of strength. That would give me a lot of confidence that there's nothing really to the downside, potentially pulling it back. And we're actually seeing that right now. I'm looking at the daily candles because that's how I like to do my analysis. But we are able to see this live, pretty remarkable. And this is, more than 15 minutes into the market being open. And so, yeah, we're seeing a gap fill. This is healthy. If we see a close above 68.21, that's showing strength. But with the FOMC tomorrow, I think that's going to, sway the markets one way or the other. If PayPal is to be an indicator on the economy, given that it is a financial play, it is in the financial sector. If we're seeing a pullback to fill this gap and then a close above, that, in my view, would show strength into the FOMC, and that could suggest that markets might rally following that meeting, following Jerome Powell speaking. Maybe following that meeting, there is a pullback in the markets, but when Jerome Powell speaks, we see the contrary. We see him, kind of reverse whatever happens in the market. There's going to be a lot of volatility tomorrow. And if we see PayPal closing the day above 68.21, that could suggest that there is strength, that there is some buffering going on regarding the earnings call. And I should note, like the high of yesterday of April 29th, the high was 67.55. As of right now, the low of today is just 5 pennies above that. I thought it was going to be lower than that, but this gap is not yet filled if we're considering that high of 67.55, but a more proper gap fill, really a proper gap fill. If we're looking at, let's see, if I switch this over to the hour time frame, we see a close here of, let's see, what am I thinking about? The close, I was looking at the lows, not the close. I think, 67.55 was the high. We see the low of 67.60. So yeah, I'm right there. But what we see with that high, I'm just going to switch over. I'm not used to looking at the hourly time frame. So the high of yesterday, was 67.55, approximately where the cursor is right now. I don't know if I can line up. Yeah, just right there. And so our low is just 5 cents above that. So that gap based on yesterday's high has not yet been filled, but a more proper gap fill is going to be based on the close, which was at a price of $67.30. Let's see if so the cursor's lined up right there. And so that's going to be a more proper gap fill because the market closed at that level, then it gapped up. And so now there's a gap there, and that will only be filled when it pulls back to 67.30. And so, I tend to draw the gap fills based on highs or lows just because I'm not perfect. And I've noticed that gaps don't always get filled. Maybe this gap is not going to get filled, and that 5 cent gap to the high, or whatever I guess that's like let's see, 67.30 was the close, and the low so far is, so that's a is that a 30%? Man, 67.30, and the high was 67.55. Yeah, so that's a 30-cent gap. It's not very big. Maybe that doesn't get filled, but having that gap leading into the FOMC and Jerome Powell speaking tomorrow, who is the Fed chair, that could, having that gap there that would make me a little worrisome if I was a shareholder. I am not. If I was a shareholder and that gap was there, maybe I'd be a little bit worried, but I do feel like with the price being where it's at now during market hours, we're okay. So that gap is filled based on the high of yesterday. Now we need to see, is 67.30 going to be filled on the It's going to be filled. It's going to be filled. I think that's healthy. But what is, going to be bullish is if we see a close now above 68.21 with price having filled that gap is filled. That is healthy in my view. But this might also be a reality check that, and actually, I think this is cool too. What do we see here on the hourly time frame? We see a rejection from $70.25. I pointed that level out during the live stream, during the earnings call. So I think that's pretty neat that level has stood out as being significant, at least on the hourly time frame, but 68.21. If you're bullish PayPal, you got to see a close. If not today, tomorrow above 68.21. It's got to reclaim that level. But what I could see, I had gone over this during the stream, is there might be a retrace to the scene of the crime, whether that's this double top revisit of that double top. We need to see, we're seeing that now, a retrace to that level. But really what I see is that we have these two highs here. This is on the daily time frame, pivot highs from March 27th and April 9th. So you can redraw that on your own chart if you'd like. I could see a retrace to that downtrend at the scene of the crime, which could correspond with the 236, which is at a price of $65.25, and that is based on a retracement from the low following the last earnings call, which was at a price of $55.77. Marked here. That retracement going up to the high hit on March 27th, which I just mentioned. And so from that retracement, that level, that 236, could coincide with a retrace to the scene of the crime. And actually, yes, we have seen a low that was, filling the gap from yesterday. Actually, yesterday's close, the close was 66. Dang it. I had thought it was 67.30, but the close is actually 66.99. So we have not yet seen a proper fill of that gap, as you can see here. I don't know why I thought it was 67.30, but oh well. I misspoke there earlier. Sorry about that. But I do think that this pullback does look pretty good, and now going up to potentially reclaim 68.21 for the close of the day. But, I'm not going to stream for all of the day. I do need to signing off, moving on with my day. And on that note, if you did enjoy this stream, if you did enjoy the coverage of the earnings call, make sure you like the video. Hopefully you are happy to, share comments, your thoughts in the comments down below. I'm happy to respond to you. And also always, share your thoughts in the live chat. I did get some nice ticker requests during the stream that I just went over. And make sure you subscribe. I do earnings calls as I can and do ticker requests live Sunday evenings at 9 p.m. Eastern. So make sure you tune into that. Happy to follow up on PayPal then, but I might follow up on PayPal, before Sunday. So, let me know in the comments if you do want to see that. Happy to do it. Thank you so much for joining, and I'm going to get on with my day. I hope you enjoy yours and the continuation of your week. Take care. Happy trading.